Hello and welcome to this very special show, Budget and Markets. Budget speech is over. Much of the important provisions have been mulled over, but none of the key markets have given this budget a thumbs up. Starting from equities, bond and currency market, all the key markets today tumbled. The minute union budget was tabled. The finance minister clearly has decided to play it safe and nothing much has been done to repair the fractured fiscal deficit. The big FDI proposals still remain work in progress, and subsidy assumptions many believe on the street have been underplayed. So what does the Union Budget 2012 mean for your portfolio, and how should you be investing after today's budget disappointment? Thoughts on that on this show from three very special guests, Uday Kotak, Kalpana Morparia and Punita Kumar Sinha. Punita, good evening to you. Thank you for joining us. A bit of a macro disappointment. Would you agree with my assessment?
I would say only a bit, because there wasn't a lot of expectation going into the budget. One was hopeful that he would make some bold moves in terms of price adjustments, and those didn't come through. But what I was encouraged by through the day when the finance minister actually spoke to the channels later on is that the fuel price hike, and whether it's petrol, diesel, is still not out of the possibility of happening in the next few weeks. So there is a possibility that that still happens. It just wasn't done through the budget. So that, as he said in his interviews, was that it's an executive decision, and they will do it as and when they think it's required. So it creates a little bit more uncertainty for the markets as to we don't know when it happens and if it happens, but the likelihood, he did not rule out that possibility. So I was encouraged by that.
But more than markets, do you think this is a clear disappointment for RBI because nothing has been done to repair the fiscal? And Reserve Bank of India in their communication on Thursday clearly indicated that a rate cut will only happen if the fiscal position is in place.
Well, yes, I think by not cutting on Thursday, the RBI already set the stage for an increase in excise and potentially other price adjustments. Which is why, I think we were expecting those to happen in the budget. They didn't happen at the amount that we wanted to, but there has been some of that happening, which will be somewhat inflationary. But the budget also provided some stimulus for growth. So it's a balancing act between inflation, growth, and fiscal deficit. And he did provide some stimulus for certain sectors. So it is more of an investment-led budget versus a consumption-led budget, which is required. And I don't think interest rates will get cut right now, but at some point, if the economy recovers from that and inflation gets curtailed, they might be able to cut.
At this moment, let me also introduce and bring on board Robert Parker, Senior Advisor with Credit Suisse. Robert, good evening to you. Thank you for joining us. Robert, what is your assessment? Markets had limited expectations from this time's budget. Thankfully for us, nothing negative has come out. But unfortunately for us, nothing positive also has come out.
I would agree with that statement, but I would just start off by saying let's recognise that the Indian government went into this budget in actually quite a difficult macroeconomic environment. Slowing growth in the fourth quarter of last year. The main feature of the Indian economy last year was obviously elevated inflation, plus what we would all agree was a substantial budget deficit in the last year, plus a current account deficit, plus obviously some structural setbacks to encouraging the opening of Indian markets to foreign real long-term investment. So the background in the last few months, frankly, has been difficult, and I think that's why the finance minister, frankly, did not have much room for manoeuvre. If one looks at the growth targets and the inflation projections for the next 18 months, I actually think the forecasts in the budget are realistic. I think it's realistic to forecast that we will see an improvement in growth to 7% plus over the next 12 months. I also think it's realistic to assume that inflation will moderate. Will the 5.1% budget deficit target be achieved for the next 12 months? I think there's a good chance that will happen. happen. I actually think that the tax measures that were initiated, broadening indirect taxation, a small concession on income tax, I think those were sensible measures. One thing I do think on the tax side, which is important, however, is detailed measures on broadening the tax base and improving the efficiency of tax collection. And I think, it's a fair statement that India has got some progress to make on that front. I think another issue is obviously a detailed, longer-term plan for subsidy reduction. And yes, there was a statement that subsidies will be maximum 2% of GDP, but I think foreign investors would have welcomed a more detailed statement on subsidy reduction.
Let me also bring on board at this moment Uday Kotak, Kotak Mahindra Bank. Mr. Kotak, good evening to you. Thank you for joining us. After the budget was tabled in the parliament, is Uday Kotak the banker disappointment? Because this budget clearly is a macro disappointment. They've done nothing also to keep the fiscal deficit under check.
I think there are two parts to it. First of all, it's the year which went by and the year ahead of us. You started last year with an aspirational budget. This year you moved to a realistic budget, and I think reality is something which the finance minister has accepted. So you therefore work with certain more acceptable assumptions about the reality of Indian politics and Indian macro. And when you take that, you have a finance minister who has these challenges, and he has worked well within those challenges.
Let me just throw two numbers at you. First, the disinvestment assumption, Mr. Kotak, of 30,000 crore. The other one is of 2G spectrum or 2G auction, about 58,000 crore. If these two things don't play out the way finance minister has assumed, there could be a big hole of about 1 lakh crore. That's about 1% of the fiscal deficit.
On the disinvestment side, if he gets the right bankers, he can get the money. And on the 2G side, if it has the right auction process and the right telecom players, he'll get the money.
So you are not the ONGC banker?
We shall be silent about it. But your assumption is reasonable.
All right.